Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Thursday, January 17th, 2008. Well, we're going to get right into it today, but I just want to touch on a couple things beforehand. Number one, the markets got crushed again today. It was an absolute bloodbath across all indexes, nothing spared, and we're going to touch on a few things, but let's first go over the indexes here. The Dow dropped almost 306 points here, 307 points. Closing in on that 12,000 mark. The Nasdaq was down 48 and the S&P was down 40 points. So unbelievable drops in the market across the board today, and we continue to see just constant selling out there. You see stocks at their 52-week lows like Cisco, just unbelievable how much they've dropped. And we're going to flip right over here to the ES chart, and I'm going to get right into it here. And we're going to look at the intraday here. Now the intraday chart, and we're going to go over a few odds and ends as we talk about the intraday chart here. Let me get my trend tools up and ready for action. Now, what we see here, and this is how the intraday went. You had some economic data at 8:30 in the morning. Now, let's go to 8:30. So right around here is 8:30, all right, right in this area here. All right, and you can see the spike up. And not only that, but you can even see a little W pattern formation, right? Little W's, that's a bullish sign, by the way. V patterns are bullish, but it really didn't materialize. What we had here, folks, was some jobless claims, a drop in the jobless claims number. Not only that, but you had housing starts, I think it was housing permits or something like that, was dramatically lower than the market expected. And you might say, well, why is that good? If people are building less homes, doesn't that mean the economy's worse, blah, blah, blah? Well, yes, it does. But to clear the amount of inventory out there, you got to have people not building for quite a while. So people are hoping that, or the idea why that number was bullish, especially for home builders today, is that if there's no one building right now, then they can clear that inventory out and then finally start from scratch at zero again with not a lot of inventory, and then the building can start again and the cycle can begin again. So that was the whole idea behind that number. And we saw a move up here on that number. But then we all knew Bernanke was going to talk at 10 o'clock. Not only that, but we had the Philly Fed number coming out at 10, which measures another key economic indicator about how strong the economy is. And this Philly Fed was insanely bad. It was horrible, folks. I think it was something like negative 20 and change. And last month, it came in at negative 1 and change, or negative 2 and change, somewhere in that range. So you're seeing a huge drop there. That scared the markets, folks, and you can see that right here. All right, here's 10 o'clock, and here's the drop. Boom, dropped. Not only that, but Bernanke started to talk, and as soon as Bernanke started to talk, also the markets just started to collapse. Then you got a little bounce, you got more selling. Every bounce was met today with more selling. And you can see right here, more selling. Another bounce, look at how we keep on bouncing right into that 20 moving average and then selling. And we basically closed almost at the lows of the day. We closed here right off the lows, and then after hours we are getting a little bit of a bounce just up here, but the question now is this capitulation? Was this selling capitulation? Was everyone kind of throwing in the towel here? Is everyone too bearish? Options expiration tomorrow. Possible Fed rate cut in the works. Now, with Bernanke on the Hill today, talking to Congress, the question has to be raised. Well, he didn't say anything necessarily about rate cuts, but let's be honest, at this point, folks, the market will be disappointed by a 50 basis point cut in the late January meeting here. The market was expecting an intra-meeting cut and then another cut at the end of January. If we don't get that intra-meeting cut, then the market will need more than a 50 basis point to think that we have any chance of staying out of recession. Now, you guys know how I feel. I'm very bearish on the economy as a whole. I think the markets are oversold here, but they can go lower. Remember, markets can stay overbought and oversold for extended amounts of time before the bounce or the drop. All right, great example of that was before the August fall, the markets were insanely overbought for long amounts of time. Every day you'd go up. You might have one day where it pulled back, but the next day you just spike up, take out that whole loss, and go even higher. So that's a good example of it on the upside. But here we are on the downside, and we can look at that. Let's look at the Nasdaq here, and we'll show you the daily chart here, and you can see this fall right here. This is a pretty brutal fall for an index. But I must say here, guys, we talked a little bit about a possible MA pattern a while ago, and it looks like it really did happen. And the A pattern was minute, if at all. All right, and this is going to be the question: if at all, was this the A pattern? If so, that's a great M, and then A pattern, which is a bearish pattern, and we're breaking down here. Now, the other thing to possibly monitor is whether or not that was even an A. or was it just part of the M? And we won't know that really until we get some more action here and some more trading. But could this be the M? That's possible. So we're still waiting on that A, which would be the bounce up here and then another leg down. Now on the Nasdaq, the crazy thing is here, and I'm going to go to I want to go to a weekly chart because I want to show March lows. We basically came down and tested those March lows. So I want to show everyone that on the chart. And you got to test those lows, I think, before we even see a possibility of a bounce. Although we are basically testing them at this point. Here's March. All right, this is the big drop we had in March. Here's the lows right here, and we're going to draw a line right along here to this point right there. Now look at that. All right, so there we go. You can see that we did test it. We didn't actually hit the low from that point, as the low is much lower. The low on that was approximately 23.31, I believe, or 23.33 or 36, right in that mid-30s area. And today we got to the low on the Nasdaq of 23.43. So we were about 10 points to 8 points above that level where the Nasdaq was back in March. Now the question is, do we bounce off this trend line? Do we have that bounce? Is this the MA pattern? One thing I am just seeing here, and I'm just looking at this briefly, it's a possible head and shoulders here on the weekly. In which case that's a very bearish sign because it would show we actually have broken down on the weekly here. And you can see this is just drawn in very roughly, so excuse that. But here's the shoulder, head, shoulder, and then obviously you could draw some sort of trend line right along here showing that we have broken down there. And you can see the result once we broke that on the weekly. Look at the fall that ensued. Ugly fall. But in any case, the next area we got to watch here on the weekly chart or on the daily chart is, do we take out and do we close below March lows? Now if we do close below on a day, then the question becomes, do we confirm that the next day on a move lower, or is it just a close below, then they bounce the markets? Because then it wouldn't be a true, in my opinion, or in our opinion, a technical indicator there that we were going lower. Now again, you have to assume that the markets are oversold here, but again, the question is, do we bounce? In my opinion, the only way we're going to bounce here, folks, is if Bernanke comes out and cuts rates, or Bush is talking tomorrow, and this was announced during the market late in the afternoon, so it's not really new news, but Bush is going to come out and talk about the preliminary stimulus package they're going to put forth. I just brought up the SPY weekly chart, and you can see again how ugly this is, and we can go back to March here on that chart and look at this. We're even below that on the SPY. Alright, the SPY basically measures the S&P. We are below that on the SPY. So that is one thing to watch there, folks, is that we have broken down on the SPY chart below March. Alright, so again, Bush is going to be out talking about it. It's not in the cards yet because they're still putting together the stimulus package, but the market, we'll see how the market reacts to that tomorrow. Also, remember in August, alright, and this is August right here, August. Remember that Thursday we had that big push down and then that big spike up, and the next day Bernanke lowered interest rates, a surprise lowering. That happened to be on Options X in August. Tomorrow is Options X, the same Friday, except this one was in August, now it's in January, and that same type of situation. So does he come out and give the markets what they're begging for? And when I say beg, that's what I'm serious about. At this point, the markets are begging for it. They have been on the weekly. Look at this 3-weekly surge, 3-bar surge to the downside on the weekly. Just ugly. All right, guys. Truly unbelievable. Let me switch off here now back to the daily chart so we can get a little better read here. All right. There we go. So again, you can see this the ultimate selling pressure that's been in this market. All right. Truly unbelievable. I do want to show you the Qs, and this is something I was looking at. Now let's look at the Qs. The Qs, remember, have been the stronger of the, I guess, the measurements. They're even stronger than the Nasdaq. The Nasdaq is touching those March lows, but ever since then, remember we talked about how Google, Baidu, Apple, Research in Motion were kind of holding the market up, and when those stocks collapsed, the market would collapse. Well, guess what? Apple has collapsed. Google has collapsed. Baidu has collapsed. And I will show you here what I'm talking about. Baidu. The high on Baidu, right over here, $429. The close today, $264.99. That's a huge fall. Percentage-wise, that's huge too. All right, Google. All right, here's Google. Closed at $600, down from a high of $747. $150 fall on Google since this all began, since the highs. Apple. All right, from a high of $203, now closed at $160.89 today. So what I'm saying here, folks, is this is the bloodbath has started, and it did come with these large caps falling. Now, what do I mean? These stocks are still generally strong comparatively, and I want to show you the weekly here again on the Qs to show you March, and that's the only way we can view March on such a small screen here when I'm doing the videos. Alright, but I want to show you this because in my opinion this is where it's going to all come from. If we're going lower, the Qs have to lead us down, and I want to show you this. Here we go. Alright, here's August low on the Qs. Look at it, we're not even there yet on the QQQ. Alright, and here's March. So we have a long ways to fall on the Qs possibly here if this is going to continue. So just be aware that we're not even at August or March lows on the Qs. So follow that very closely, guys. We have broken down on the Qs. There's no doubt about it. A little bit of a head and shoulder possible formation here as well. Keep watching that, guys. We'll be back tomorrow with another